like a very good set of earnings from TCS. So after 6 straight quarters of a miss, this time TCS has managed to beat street expectations. The company has delivered a 1.5% growth in dollar terms. This is largely in line with street expectations of 1.4%, but constant currency revenue growth of 2.1% is higher than expectations of 1.7 to 1.8. Margins, however, have come in lower than expectations. So margins have declined by 54 basis points to 26.1%. Street expectation was for a margin to improve on the back of the near 2.5% rupee depreciation. So the margin miss is a bit of a problem, but generally TCS has held on to its margins for the last so many quarters within that band. So you wouldn't worry too much about 1 quarter of a 50 basis points decline, though the key reason for that will be keenly watched. With respect to the net income, it's gone up by 3.8% QOQ to 6,341 crore, and this is again higher than our expectations. So it's beat our expectations by 100 crore. Net TCS has come out with a good set of earnings. With respect to what they've delivered for the full year, the company's dollar revenues have gone up by 7.1%. This would be about 200 basis points lower than what Infosys clocked in FY16. In constant currency, the company's delivered 11.9% for FY16, and this would compare with 13.3% that Infosys clocked in. That said, this Q4 FY16 has been better than what the street was anticipating with respect to the 2.1% constant currency revenue growth. But I think the street would want to see some sort of a consistency. It's been 6 straight quarters of a decline. Whether this is a one-off that the company has managed to, meet and slightly beat street expectations, and whether they can contain, if the recent portfolio challenges which have hurt TCS and dragged down the performance in the last 6 quarters has abated, and now the company's turned the corner and they can go back to their earlier history of, meeting and beating street expectations.
Okay.
But Q4
Reema,
numbers are looking good. Yes.